Let's talk flows, right? Cameron Brandt is now joining us. He's Director of Research at EPFR Global. Cameron, great to have you with us here on the program. Thank you very much for your time. Foreigners have continued to sell with some gusto, and sometimes with gusto, sometimes maybe, not with too much gusto, but it's been negative. Since September last year, FIs in India have sold another $20–25 billion, Cameron. What's the trend looking like? What can you tell us? And any indications out there when this will turn?
It's certainly from a mutual fund perspective, it has actually accelerated early in the new year. This week's redemptions from dedicated India equity funds are the biggest since the first quarter of 2022 on a weekly basis. And investor intention at the moment, it really is elsewhere. The most obvious candidate, of course, being the US. US mandated bond, money market, and equity funds took in over $500 billion in the final 2 months of last year. And they've come out of the gate swinging again this year. And there's also sort of a contrarian bargain hunting spirit evident in the flows at the moment. If you truly believed everything that Trump had said recently, you wouldn't be increasing your exposure to ESG funds, Mexico, Canada, but in fact, all of those fund groups have seen fair to good inflows this week. And when it comes to emerging markets, the focus, at least for now, is back on China. Investors are sort of looking for cheaper markets and are testing the premise that these step-by-step stimulus measures that Chinese policymakers are unveiling will at some point catch on and help fuel something of a rebound in that market. I would say it's less sort of active hostility towards what India has to offer, though I think there's definitely a narrative that Indian equities have gotten expensive and a certain degree of correction is welcome. But it's more to do with the sort of investing universe focus being on the two heavyweights at the moment, the US and China.
That's interesting. Cameron, hi, thanks for joining in. Interesting that you are picking up a flow back into China. I guess all eyes there on their next policy steps as well. But on emerging markets otherwise, I mean, overall, are EM funds getting any money? Or are there outflows? And I missed the point on India, on the India dedicated funds. Can you share some broad numbers? I mean, what's the inflow or outflow? What's the trend that you've noticed in the last few weeks?
So the trend has been accelerating outflows, not to shocking levels, but as I said, this week's redemptions are the biggest, certainly in over 2 years, actually getting on for 3 years. And overall sentiment towards emerging markets ex-China is not particularly strong. The global emerging market funds, which is sort of a bellwether for broad sentiment towards the asset class, have not been doing particularly well. The one sort of bright spot in the emerging markets universe at the moment is the rather beaten up EMEA markets, where I think investors are doing a little positioning based on the fact that there's going to be some degree of peace breaking out in key markets. South Africa's worst case political scenarios have not materialized, and if anything, the best case scenario seems to be unfolding. And there's certainly hopes that fighting in the Ukraine and in much of the Middle East will dial down and maybe even cease in the first 6 months of next year. So in as much as there is any enthusiasm for emerging markets outside of China at the moment, it is actually focused in the EMEA universe.
All right, Cameron, yeah, no, absolutely got that. Thank you very much for joining us, and thank you for sharing those insights, those views. Appreciate it very much here on CNBC TV 18 this Friday morning.